Hi everyone, welcome to this time's Scrolling Finance! Well, last week was pretty warm to bond investors. Bond yield curve became bold step compared to the week before, with crucial terms like 3, 5, 10, and 30 years decreasing 5, 4, 3, and 4 basis points respectively, and the spreads between Chinese government bonds and corporate bonds was almost as the same. 10 years spread was 55 basis points. So what caused this warm spring situation last week? And will this peaceful time continue in the second quarter? Well, let me tell you the following story. For fundamentals, no economic data was released last week, but the PBOC made a big move on the way of moderately loose monetary policy. And at the end of trading time on Monday, the PBOC announced that it will launch a 450 billion yuan MLF operation tomorrow and change the bidding method to multi-price bidding. This change cost us 63 billion yuan MLF net investment in March, and was deemed as a signal of losing funding condition. So from Monday's afternoon, bond yields decreased rapidly. The long-term trend performed better with 5 basis points decreasing, and the short-term trend decreased 3 basis points. If we look back from the beginning of this time's adjustment of bonds market from February 5th to March 25th, we can roughly separate it into two parts. The first part was the increasing trend, which was from February 5th to March 19th. The main reason included the tightened funding condition and the moderately loose monetary policy doesn't reach the expectation and the enthusiasm in equity market brought by the AI trend. First two factors were reversed by the MLF operation of the PBOC on last Monday. So for now, we are mostly past the tail of the first part and entered the first stage of the second part, which is the fluctuating and decreasing part. Maybe the funding condition will be stable and the AI trend seems to be cooling down these days, so the prospect of bonds market is turning good from fundamentals view. In terms of funding condition, although the PBOC made some progress about the MLF operation, but the funding condition wasn't loose much. The financing price of 7 days was still above 2.3%. Though changing the bidding method of MLF was deemed as a loose attitude towards funding condition, but which doesn't bring an actual downward on financing price, the total environment is still like sufficient liquidity but with a high price. About bond investment strategies, like I said before, bond investors have to hold the bleeding position and wait for bond yields reverse. So if you have some positions, then good luck, you catch the downward trend this time. And if you don't have any position, you can just buy some now, because you don't want to miss it again. Oh, if you hold a short position, oh man, that wasn't even wrong. So if we talk about the outlook of bonds market in the second quarter, I likely to see that the economic growth momentum will likely soften from the second quarter onwards because of the impact of tariffs, deflation pressures, and the fading of the AI enthusiasm. Talking all, the PBOC may cut RRR and other policy interest rates quickly than expectations, but we still have to maintain some cautions about the funding condition and the attitude of the PBOC towards bonds market. After all, no one knows where is the degree of comfort room with current bond yields. For all of this, short-term trend may be a better choice than long-term trend if you want to strengthen the long-side position. So as always, if you want to know more useful financing information about the Chinese bond market and economic situation, please like, share, and subscribe. I will always be here, share my understanding and experience, and waiting for you. So bye guys, until next time.